Then we said under the auditing principles, the main thing is what is to define what is the purpose of the audit, is to give a reasonable assurance on the accuracy of that the financial statements are free of material error. This is the word, the most important word is the reasonable assurance. Why the word reasonable is that we are not absolute, we are not totally sure, because we are using samples, and because we are using a sample, there were a billion transactions, we took a sample that we hope represent the population, and then we are giving a reasonable assurance that the financial statements are free of a significant misstatement, or you can call it material errors and fraud. Material errors and fraud, significant misstatement, material errors, and therefore you are giving an assurance that you have reviewed the manner in which the financial statements or the reports were prepared, and the financial reports were, and you are giving a reasonable assurance that that is the purpose of the audit, and you have done that in accordance with the general accepted auditing standards. That is principle number one. Principle number two is to highlight that these financial statements were prepared by management, financial statements. Remember, we have defined accounting as the recording, classification, and summarization of financial transactions. And we said summarization means preparation of financial reports in the form of financial statements. And that has to be done by, the principle is that for you to give that reasonable assurance, it must be very clear that the management is responsible for preparing financial statements, for preparing all the notes and the disclosures that are part of the financial statement, establishing controls, that's the methods of ensuring that the financial data is accurate, and managing the financial internal controls, maintain and ensure that internal controls are maintained within the organization. We'll still speak to this term of internal controls if it's giving you a little bit of a runaround. So we are at principle number two, and then we are at principles of what are the responsibilities of the auditor. Let's go to the principles again. We're at principles one. Principle one, we said purpose. Principle two, we said management responsibility. Principle of standard number three is the personal responsibility of the auditor. Let's go to principle. We are going to discuss the auditor's actions in performing an audit. The personal responsibilities of an auditor is to ensure that they are competent, they have competent, and they have the capacity to follow standards and to maintain professional skepticism. So let's go to that explanation of principle number three. As the personal, an auditor must ensure that they are competent and they have the necessary skills to execute the project. If they find themselves to be in a position where they cannot express an opinion, unfortunately, basic as it may look like, you cannot express an opinion on something that you do not appreciate. First, the auditor must ensure that they appreciate, they are competent, they appreciate the subject matter. Therefore, they are competent and they have the right skills to be able to function. And what we mean they are competent, and that means they have been formally trained in the accountancy profession. They have the auditing and accounting education. Accountancy education, auditing and accounting, that means they have a BICA in Botswana, they have an ACCA or a CIMA, or they have a BICA qualifications or any other qualification that is recognized by Botswana Institute of Chartered Accountants. This is how it works. If you decide when you finish your first degree, are you there, guys? No one is even coughing.
Yes, we are here.
Yes. When you finish your first degree now, you may decide to take any accountancy qualification. You may decide to do CIMA, you may decide to do ACCA, or you may decide to do BICA, or you may decide to do the South African qualification, the Indian qualification, the Tanzanian qualification, whatever qualification of a CA qualification, education qualification you have, when you bring it to Botswana Institute of Chartered Accountants, that is the institute, they will check whether your qualification is equivalent. In other words, is equivalent to BIC. If it's equivalent to what they are happy that you are adequately trained, wherever you got the qualification, the transcript and the GPA that you got is adequate for them to say you are okay, now you are equivalent to BICA. Then they'll issue with a BICA membership, a BICA membership to say, even though you qualified in South Africa to do your accountancy training or your auditing training, now you are equivalent to someone who has written a BICA, so you are a BICA equivalent. Then they look at the practical experience. When they look at it, then they will say, in the BICA, are you an ordinary member or you're a professional member until you become a fellow member, like I'm a fellow member? Look at experience and the exposure. And they want to ensure that even if you qualified 10 years ago, and you have practical experience on a daily basis, are you continuous professional development? Are you continuously following the profession such that whatever changes in the standards, either auditing standards or accounting standards, you are up to date, and they give you exams or quizzes every year to check if you pass, you earn points. And when you renew your license every year, you demonstrate that you have continuously been upgrading yourselves. So you are at par. You have recent knowledge of the standards. So that's how you maintain your membership. The auditor must have. If you look at audit firms, they tend to, although they have a basket of clients from different industries, but if you look at audit firms, each audit firms tend to specialize in a certain area. You find that they probably over 50% of their clients are retailing. Others over 50% are education institutes. Others they like farming. Others they like this professional proficient, especially in the client's industry. You tend to want to specialize in a certain area. So, and you find that most audit firms have more than one auditor. And because of this, one auditor will choose to specialize in one area, another auditor in another area, another auditor in another, so that they can bring a basket in which they are proficient. So if I'm an audit partner at XYZ, say to them, I'm going to specialize in the auditing of agriculture project firms. So I want to know how maize is valued, how work in progress of crops is done, how standards relating to agriculture and valuation of stock and whatever is done. Then I become auditor who specializes in that. Then one of us, because we are partners in a partnership, we say, with me, I would want to specialize in education institutions. This ones we want to specialize in banking institutions. This one want to specialize in retailing. So you must have be proficient in the client's industry. So that is what this is. Then reduces the risk of you being misled by the client when you are doing the audit. You must, as you probably would have noticed, as you probably would have noticed. As you probably would have noticed, an auditor, because of their background of being a heavily ethical institution, and an auditor being an accountancy professional, is required to adhere to the principles of the basic ethical requirements that the auditor would have to adhere to. I've brought these ones that I think you are familiar with. Issues of integrity. An auditor, because first of almost, an auditor is an accountant before he becomes an auditor. First, you become an accountant, then become an auditor. So you qualify in an accountancy qualification, then you specialize in audit. So these five fundamental principles of ethics for professional accountants applies to an audit. Are you there?
Yes, sir.
Yes. Issues of integrity. You need to be straightforward and honest in all professional business relationships. If you are going to tell someone that he has made a loss, you must tell them in their face as nice as possible. You need the integrity, you need to tell the truth at all the time. Objectivity, try not to be compromised so that you are able to give a clean judgment. Avoid conflict of interest and undue influence by others. For you to be objective, avoid putting yourself in a conflicted situation where, for instance, you drink with the client. If you drink with the client, whether you are objective or not in expressing an opinion, you appear not to be objective because you play football with the client. So try not to do that. Try to be professionally competent, and the common law requires that you must make sure that you above par with your knowledge of the organization, of the profession, and the organization that you are dealing with, so that because you owe these people a duty of care. People are going to rely on your opinion, so you cannot disappoint them by expressing an opinion on a matter that you are not sure about. Confidentiality is that do not tell on others, businesses or whatever. Keep information to the relevant parties. Professional behavior. Ensure that the business or yourself, everything works within the law, so that this is what is called professional behavior. These are the fundamental principles of ethical behavior as an accountant, which the auditor brings to his profession, and also find the international standards of auditing also bringing some ethical guidelines on how to behave in an assignment. And they will also emphasize issues of independence and all sorts in the functions of it. So ethics is everything. Ethical way. Professional skepticism. The expectation is that as an auditor, that is principle number 2, you must at all times be on the lookout of be professionally skeptical, on the lookout of anything that would trigger you to, not to say people are stealing, but be on the lookout on anything that will communicate that there's a likelihood of a potential error, fraud, or misstatement. A professional is everything to an audit. You should be on guard on any figure that moves in a manner that pre-suggests that could be an error, or any behavior that pre-suggests that there could be non-disclosure or misdirection by the client. And for you to be, you need to be communicating with the client at all levels to get information about whether the disclosures that you are getting from the management is correct. A short conversation with the security guard could reveal that there have been misbehavior or non-disclosure by the client. So professional skepticism and professional judgment, every judgment that you make about whether something is right or wrong, positive or negative, should be based on your professional background. You should be professional and independent, and should be informed by evidence that why you arrived at such a judgment. That is, we are at the general accepted auditing standards. The other principle that the auditor should adhere to is the auditor must demonstrate quality work by following the following steps in his audit process. The auditor must plan the audit, and plan is such that this and supervise junior staff such that the planning process is important for the auditor to determine how much resources they are going to use in the whole process, and provide supervision to interns, all the not so experienced people, in the gathering of evidence that shall be used to express an opinion. The auditor must set and apply materiality levels. Materiality is defined at the level of error, which, when committed or omitted, will change the understanding of the financial statements by the users. For instance, if a 10 puller, when added to expenses or omitted from the expenses, is such that it will change the perception of those expenses by the user, then that 10 puller is material. If the 10 puller, whether you have included the 10 puller in the expenses or you have not included the 10 puller in the expenses, the users of the financials, it will have no bearing on the users of the financial statement. Then that thing is said to be immaterial. If it's material, if it is when it will have a bearing on the users of, they can change their perception of the financial statement on whether an item has been included or excluded. Are you there?
Yes, sir.
Do we understand what materiality is? The auditor, in their actions, should assess risk of material misstatement. As you approach a client, put yourself in your position as to how risky is this business in terms of its ability to deliver proper financial statements. Your assessment of risk starts from your assessment of the board. They are saying the tone at the top. What is the attitude of the governing body towards the accuracy of the financial statements that can be produced by this organization? If you look at the structure of the governing body, even before you touch any single transaction in the organization, if you look at the governing body, that is the board of directors, and you find that it's properly constituted, the board of directors has the right proportion of skills. It has their chartered accountants who are independent. It has industry experts who are independent. And you look at the top level of executives, you find that the CEO is properly qualified, the CFO is properly qualified, the head of operations is qualified. All these people are properly qualified. And even before that, you look at the quality of the board minutes. You are a new auditor, you look at all those. Even before you touch any document, you can see whether you can evaluate the risk of that organization, whether the risk is high for them producing incorrect financial statements or not. If you find that all the processes are being followed, the boards meet every time, everything is properly minuted, board committees are in place, board committees meet every time and again. They review the performance, the board finance and audit committee reviews the performance of the the financial performance of the organization. The chairman of the Finance and Audit Committee is competent to chair that committee. You look at the quality of the minutes of the board, the governing bodies. Even before you look at the CEO, you walk around the organization and look at how things are moving, even if before you touch anything in terms of establish whether the financial statements that will come out of this will be a true and fair view of what is happening. You can assess the risk profile of an organization. If you walk through an organization, you ask, who is the board? We don't have the board. Who is the board chairman? Is another guy who works on the side. When did you last meet? We haven't last met for the last 3 years. Do you have board subcommittees? We don't have. Do you have the board charter? We didn't have. Do you have anything that guides how the subcommittees should work? We don't have. When did you last have a management meeting? We don't have. Who is the MD? How many times does he come to? He doesn't come to the office unless it's paid. What is he? That is the assessment even before you look at the audit to express an opinion as to whether the financial statement given true and fair view. You must assess the risk of material misstatement. Are you getting me?
Yes.
We are assessing the risk as to how much risk is that the financial statements produced by this organization will be true and fair. Third, in performing this duty, the auditor must collect sufficient and appropriate evidence. We said the basis of an opinion of an audit, there's only one thing that we are looking at we want from an audit is to express an opinion, to give us a reasonable assurance based on the evidence that you would have collected from the billion transactions that took place over the past 12 months. He must be able to look for sufficient and relevant evidence that will be the basis of expressing an opinion. He must say, I've looked at the following evidence, and when it comes to when things hit the fan, we should be able to ask him to produce the sufficient and appropriate evidence. He must say to us, yes, I declared the accounts to be true and fair, to be unmodified, because I looked at this evidence, which I looked at this evidence, which to me was sufficient and it was relevant. That's why I expressed an opinion that I'll issue an unmodified report that the financial statements give a true and fair view. And that all those things are summarized in this adequate planning. Yes, materiality. Yes, I covered. Risk, assess the risk of material misstatement. I covered, and sufficient and appropriate evidence. I've covered. Reporting, the last principle. The auditor must express an opinion in a written report on the fairness of financial statements according to the relevant framework. This opinion stems from the audit evidence and findings. If no opinion can be given, the audit should clearly indicate that. I don't know how to emphasize that. There's only one thing that we are looking from you as an auditor. What do you think, based your opinion about these financial reports that have been put before us? Are they a representation of what happened in the last 12 months? Or this is all we want from you? An opinion. A modified or unmodified opinion. And we are saying, for you to give us an opinion, you must base your opinion on the evidence that you collected. And the evidence that you collected, it must be sufficient and appropriate. And it should lead you to this opinion. So this opinion must be being arrived at based on the evidence and findings that you found. You express an opinion or you do not express an opinion. And we discussed the opinions that we said modified, qualified, what those opinions that we discussed are the reason why we are inviting an auditor to our premises is to say, as shareholders of the company, we have employed this bunch of guys, the governing body, which are the directors and the executives. They are running the business on our behalf. We invested money into the business. They are giving us this report and they are telling us we made money. Can you tell us as a professional, give us an opinion of what you think of their report? Is it correct or not? What is, you will say yes. Based on the evidence that I found sufficient, I can give you a reasonable assurance that they tell us, reasonable assurance that these financial statements are free of errors and misstatement and fraud. Therefore, you can rely on them. Or based on 1, 2, 3, you cannot rely on this financial statement because in chapter so they did not follow the framework. They did not follow the standards in preparing the financial statement. Or 1, 2, 3, this happened during the 12 months. So I'm skeptical. I'm as skeptical as an auditor that you can rely on the financial statements. Are you there?
Yes.
That is your job as an audit, to express an opinion. Next, the auditor his job is to express an opinion, that we know. But in expressing this opinion, there are certain standards that are required of an auditor. Like any other profession, there are certain standards of methods of conducting the audit process that the auditor is required to adhere to. I repeat, in conducting the audit process, which is the collection of sufficient and appropriate evidence, which culminates in the collection of the sufficient, which starts with it starts with the collection of sufficient and appropriate evidence, which culminates in an opinion. There are certain quality standards that the auditor is required to follow. First, the Internet Standards on Audit requires that every person who does the function of auditing must adhere to certain standards of quality that would allow the regulatory authority to check whether the audit work that was performed by the auditor adhered to some kind of quality control system. So this is what happens in the profession. What happens is that the audit firms, they go all out to go and audit. That means they go and look for evidence and check if the evidence is appropriate. And on the basis of that sufficient and appropriate evidence, what evidence are they looking for? They are looking for whether the accounting standards have been properly followed. Accounting for fixed assets, was it done properly? Accounting for sales, and accounting for cash, accounting for what? The debits and credits, the reporting, the disclosures, that's the evidence to check if anything was done proper. That is the evidence they are looking for. It is on the basis of that evidence that they will give you an opinion as to whether the account should be modified or not. And as they collect that evidence, they must adhere to a firm's quality control system. Quality control system. this quality control system is the one that gives the regulating authority, which is BAWA. Once the auditor has done the audit, every 2 to 3 years, BAWA will ask Botswana Accountancy Oversight Authority, will go to the audit firm and check on how the audit firm was collecting sufficient and appropriate evidence, whether it was systematic and whether they had a quality control system, a certain method of collecting the evidence that will give us an assurance that this evidence was properly collected, and on the basis of that evidence you can arrive at an appropriate opinion. That is called a quality control system. And as an audit firm, the first standard quality control standard is to disassociate yourself with persons, clients that have no integrity. Because you are going to be working with samples, you are not going to check everything in that organization. You must check whether the integrity of that client is sufficient enough for you to associate with it. Generally in auditing, one big example about that is generally in auditing, the auditor must be present at the time of stock take. But what most clients do, especially those who have a lot of depots, you give them a timetable that you'll be taking stock in Gaborone today in their warehouse, and tomorrow you'll be in Mahalape, the third day you'll be in Francistown. Clients without integrity, they can allow you to take stock tonight up to 5 o'clock. And you tell them that you'll be in Mahalape on Tuesday. Then after you take stock, they load the stock on a truck. And when you wake up in the morning in Mahalape, you find the stock, the same stock now has been put in the shelves in Mahalape. So you count the same stock twice. These are issues of and every firm must have a quality control system that has been documented. And every quality control method of collecting evidence must contain the following elements that the firm will establish: leadership, everything, the tone at the top. There's a proverb that says the fish starts rotting from the head. Is that correct? Hello?
What?
There's a saying that says the fish starts rotting from the head. Have you heard of that? Even before you touch an organization, by just looking at the leadership structure, you can deduce whether quality is going to be there or not. Isn't it? The tone of adherence to qualities depends on the culture of the leadership. The tone on adherence to quality depends on the culture of the leadership. The leadership in an audit firm will determine first the quality of the audit managers, the method in which they are going to be collecting, the tone, their posture, their seriousness about quality will determine whether this audit firm is capable of collecting sufficient and appropriate evidence. Because unfortunately, in an audit environment, the quality of sufficient and appropriate evidence depends largely on the competence, the skill, and the experience of the auditors. So, as you, if you are evaluating an audit firm, it is the quality of the leadership that will determine the seriousness of the leadership that will determine or whether the whole audit process that they are taking is capable of collecting sufficient and appropriate knowledge that will culminate in an opinion that will going to be given. Let's start with leadership. The firm itself, that is the audit partners, must have a culture of quality. And the culture of quality can be reinforced through training of the audit methods that they are going to be used, through training and workshops of the standards of auditing, accounting standards, laws, and best practices in everything. Remember, the auditor, although does not is not his responsibility to produce financial reports, which in the definition they called summaries, he should be place himself in a position that he knows how financial reports are being produced. This, ladies and gentlemen, is becoming even more complicated. With the fact in Botswana, with the effect from the 1st of April, we are now in September, it is going to be mandatory that in the preparation of financial reports, the accountant must produce what is called, does anyone know? An integrated report, which used to be called an annual report. An integrated report shall cover a lot of things that include how value is created within the organization. They must also produce what is called a sustainability report, how the business can be sustained going forward. It's a massive report. They've made the accounting even more complicated because previously the financial statements were adequate for the expression of an opinion. Today, the auditor must verify the adequacy and the consistency of the whole integrated report on the whole business model or business strategy. So, previously, are you there?
Yes, sir.
Before 1st of April this year, your job was to prepare the profit and loss account, the balance sheet, the notes, the disclosures. Now your job is to tell us how value has been created as a CFO, as a financial person. How is value being created in your organization? How do you make money in your organization? You are going to be disclosing starting 1st of April. Previously, you were not disclosing how much the board and the executive is earning. Starting from 1st of April this year, all organizations must disclose how much everyone at the top is earning in the face of the integrated report. And they must write my name, Mr. Hobona Tobeza Motswana. During the last 12 months as a director, we paid him 1 million pool. Mr. XYZ, as a non-executive director, we paid him this minimum. Mr. XYZ, as a we paid him. So we are able to, the regulator wants to disclosure is also some form of management. You cannot manage something if you can't measure it. It is common in this market that sometimes you find that a Botswana director is paid 50 pula and a foreign director is paid 150 pula. If they think it's fine, then they shouldn't have a problem with disclosing it. So today, if you are an executive at, it was common disease in this country that will have a local being paid 50 pula and the same position for an expatriate, perhaps the expert even with lower qualification will be paid 100 pula. Isn't that a common disease here? Those who are working, would you share that opinion with me? Hello, are you there? Hello?
Yes, sir.
Have you heard of that? At least heard of it now that you are not working. Have you heard of it?
Yes, sir. We've heard of it.
That is common everywhere. If you go to the audit firms, you find auditors from certain countries. If you go there, join at the same level, auditors from certain countries who have an equivalent of an accounting degree like you are being paid more than you because you are a local and are being paid more. We just want to get to the bottom of why things are. Partners who are citizen partners get paid far less than partners who are foreign partners. That disease is predominant in Botswana. Directors who are local directors are being paid far less than directors who are foreign directors. That disease, for whatever, if there's a good reason for that, then they will not have a problem in disclosing that in the integrated report. Ladies and gentlemen, let's stop there for today. We'll meet again on Wednesday. Definitely on Wednesday I'm in, and we see how we close the chapter on the framework. Then we start something tangible. I'm told the short VEC is around the mid-September. When is the short VEC? When is the short VEC? That you shouldn't
18th.
miss. I know, you know. Around the 18th to the 22nd, isn't it?
Yes, it is.
So today is the 28th. We are going to continue on the 30th, 1st, 4th, 6th, 8th, 11th, 13th, 15th. We should write our first test immediately after short work. Let's propose Wednesday after short work, which is the 27th. Just before you go for, I think the 29th is not a holiday, is it? Are you there?
It's supposed to be a holiday.
Yes, sir.
It's a holiday, or it's supposed to be. The 29th has never been a holiday, unless the holiday could be on Monday, the 2nd of October.
Actually, it's Friday, so people have to go to their homes.
But it's not a holiday. Anyway, fine. But Wednesday is definitely not a holiday. So let's schedule for Wednesday 6th. I'll try and find a venue. Agreed.
Yes, sir.
We are penciling it on
Which
the
Wednesday?
20th. I beg your pardon?
Which Wednesday, sir?
Wednesday, the 27th of September.
Okay, sir.
I'm penciling Wednesday, the 27th as test 1. Would we have covered so much material, you won't believe it. Sure, thank you. See you on Wednesday. Wednesday, the 30th of August. Then we have another 2 weeks of learning. Then you go for a shop back. When you come back, 2 days after you come back, we write a test. Agir.
Error.
Sure. Thank you. Good day.
Bye.